Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it Tremors because that's exactly what hit the marketplace here in the last 2 to 3 days of this week, especially after the CPI reading that came out and it basically showed inflation was slowing down, and all of a sudden a whole lot of things changed. We're going to focus on the Russell 2000 ETF IWM today, the dollar index, and then three major sectors that we'll look at in just a second. So let's start off here with IWM. It was up $2.46 on Friday, up $12.27 for the week, 6.1%. By far the biggest mover of the major indices that we look at. You know, the S&P, the Dow, the NASDAQ, the Russell was the biggest and strongest. Now, we'd been looking for this to head south. I really had a bearish slant on this. I really thought we had a C wave underway. I thought we were looking for a third wave down. But what I said to my members was, after we'd been in this for several weeks, it wasn't looking and acting like a third wave at all. And it was just basically stalling out, and it was chopping around. And I told them that if this looks like a range right in here, and depending on which way we go, it's going to reinforce what's happening with this market. So if it came down and closed below this low right here around 197.50, then I felt like, okay, the bearish view was getting a continuation. It was starting to play out. But if we close above this high right here, which I'm looking for it to give it to me, the high 207.27, which it did on Thursday, I said that's going to reinforce that we're going in the opposite direction. It took out the May highs on a close. It's now, taking out the April highs over here on the weekly view with what it did on Friday. So we've now moved to a much more bullish scenario. So I think we've got, a bullish wave underway, an impulse wave structure. It's the way it looks to me. So I am looking for a third wave and a third of a third to start to play out. Now, we had a big move this week. This is a huge range, the range from high to low, $14.41. Hasn't broken out of this base channel just yet, but it sure is looking and acting pretty doggone strong. So we'll look for continuation and see if this plays out according to that roadmap. Okay, that's the Russell 2000. Now let's take a look at the dollar index. Okay, I'm going to go up here and pull up the dollar index. So the dollar was down 35 cents on Friday. Continuation. It broke this trend line, which I'll talk about in a minute, on Thursday. And it was down 78 cents for the week. And I'll come back to the weekly view in a minute. Here's the daily view that I've been looking at and monitoring, watching this trend line. Again, when we'd been pretty bullish on the dollar, but then all of a sudden we started to stall out and we rolled over right in here over the beginning of the last week. And then we broke that trend line on Thursday, and that was not a good sign. Now, we're into a support area. And I say it's a support area because the lows of April and May and early June are right in this zone, which is like 103.90 to 104.08. And, we closed 104.09, and the low was 104.04. So we're right there in this support zone. I think if we close below that zone, we're going to get the continuation that comes down and at a minimum challenges the March lows. So this is what I'm looking at. We had been watching and looking at a very bullish scenario for the dollar, but I am now moving to a much more bearish scenario. Let's just look at the dollar, the weekly analysis of the dollar. So here's the wave count I'm holding right now. I think we've come down in in a primary wave 1, wave 2 back up into the October 23 highs. And then now we're working our way down 1, 2, and we should be in a third intermediate wave. This should start to accelerate if this is playing out. and we should take out the, let me look at that, the December low of 100.617. Okay, now what is this a part of? I've talked about this briefly before. Here's my monthly view. Here's all the data I have on the dollar index going back 40 years, over 40 years. So this uptrend that we've been in looks like a counter trend move to me, the way it's played out. It looks like a W, X, and a Y. And now, if that's the case, this should break down, and it's already looking like it's starting, okay? And so the expectation would be for this to continue to come lower, break out of this channel, and get a lot more negative. It'll, come down. If we break out of that channel, we're going to come down and test these lows of, where is this, 2021, and the 2018 lows. Okay, so that's what's going on there. All right, let's take a look at three macro sectors, and we're going to look at those side by side. So here, I'm going to pull these up right. Wrong one. Here we go. U.S. Real Estate ETF, IWR, the bank ETF, KBE, and the Homebuilders. Real estate up 4.8%. Look at this move. Huge, huge move. 7.7% to the upside on banks. And all you read about in the press was, the reports weren't all that great on Friday, et cetera, et cetera. And yeah, they did hit Wells Fargo, and, they pulled back on JP Morgan and others. But look what KBE did this last week, up 7.7%. And then when you look at the home builders, huge rip, up 10.8% for the week. Huge explosion. Let's go in. I'm going to come back over here and let's pull up IYR and take a little bit closer look right here at what's going on from a little bigger picture. So the close this last week, I believe, is above a trend line that we need to see some continuation, but it sure looks like it's wanting to break higher. We need to take out and start putting in higher highs. We got higher lows, start taking out this high and continue to push. So all we heard about for months, in the last year or two, is, the bad situation with commercial real estate, etc. Well, all of a sudden, what are we seeing? This is the highest close on this ETF since back over here in January of 23, I believe. Yeah, we've closed above all the other weekly closes here on IWR. Not IW, IYR. IWR, no, don't think so. Okay, let's take a look at KBE. All right, so look at this. So this big move that we had, up $3.51, closed above what looks like a major resistance area. Okay, I had identified this months ago based on all of this trading activity that occurred from mid 22 into mid 23, early 23. We had that big breakdown when we had the bank crisis in March of 23. Okay, and now we're back up and we're closing what looks like above it, but we need to come up, take out some highs. But right now, this looks pretty strong, looks pretty bullish. And speaking of banks, when you look at the regional banks, this just broke a major downtrend line all the way back from January of 22. Again, you need continuation to the upside and start putting in higher highs and higher lows. But right now, this looks pretty positive, up $4.15. And then I'll conclude with the home builders, XHB. So big move with this, $10.60. Now, the interesting thing here is this just continues to look like it wants to push higher. And here's the daily view. So we had a little trend line coming off that high back from April, and it looks like we're getting the breakout. Now, we've come a long way to pull that out, so I wouldn't be surprised to see us either consolidate or pull back a little bit and then resume. But it's sure, nice volume on this move too, huge volume on the move. All right, that's the picture that we've got for this week. A lot of tremors moving through the marketplace. And of course, you know, with these going up, we had the Qs and technology kind of stalling out a little bit this week. We'll see what happens next week. All right, if you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the YouTube channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. All right, everyone, have a great week. We'll talk to you on the next video.